Hey everyone, and welcome back to the channel. Today we're rediving deep into a major shift happening in the global economy as we wrap up the year. The US dollar is taking a serious tumble, and it looks like this trend is set to continue. Let's break down what this means for you, for global markets, and for the year ahead. The US dollar is currently on track for its biggest annual drop since 2017. Just this past Wednesday, it slipped even lower. So, what's driving this? A big part of the story is market sentiment around the Federal Reserve. More and more investors are betting that the Fed will have room to cut interest rates next year. This belief is getting stronger as inflation shows consistent signs of cooling down. Interestingly, even a robust US GDP report, which you'd normally expect to boost the dollar, didn't change this outlook. The market has already priced in about 2 more rate cuts from the Fed in 2026. This signals a growing confidence that monetary policy is about to get a lot more accommodative. Major players like Goldman Sachs are predicting that policymakers could make 2 quarter-point reductions, which would bring interest rates down to somewhere between 3 and 3.25%. The key takeaway here is that slowing price pressures are paving the way for lower rates, and that's putting significant pressure on the dollar. As the dollar weakens, we're seeing other major currencies step up and gain strength. Both the euro and the British pound have hit 3-month highs, trading around 1.18 and 1.35 respectively. While the day-to-day changes might seem small, the bigger picture shows a rebalancing act among the world's top currencies. The dollar index, which measures the greenback against a basket of its peers, has dropped to its lowest point in over 2 months. For the year, it's down nearly 10%. If this holds, it will be the dollar's worst annual performance in several years. Looking back, 2025 has been a roller coaster for the dollar. It's been tossed around by shifting trade policies and the ever-changing expectations about what the Federal Reserve will do next. This volatility has pushed many investors to look for opportunities outside of the US currency and diversify their portfolios. On the flip side, the euro has had a fantastic year, gaining more than 14%. This is its best performance since way back in 2003. The European Central Bank recently decided to hold its interest rate steady and even slightly upgraded its outlook for economic growth and inflation. This suggests a period of stability is on the horizon for the Eurozone, which is a very positive sign for the currency. The shift in the currency landscape isn't just limited to Europe. Markets are now considering the possibility of tighter monetary policy in other parts of the world, like Australia and New Zealand. As a result, their currencies have also seen a nice boost. The Australian dollar is up more than 8% this year, and the New Zealand dollar has also climbed to multi-month highs. The British pound has followed a similar path, also advancing over 8% in 2025. Even though most investors are only expecting modest rate adjustments from the Bank of England next year, confidence in the pound remains quite strong. It seems the market is comfortable with the UK's economic direction, at least for now. Now, let's talk about gold. The classic safe haven asset has been shining brightly, hitting new record levels. This isn't just a flash in the pan. It reflects a broader trend where investors are favoring assets that are seen as long-term stores of value, especially during times of currency fluctuation and economic uncertainty. When the dollar weakens, gold, which is priced in dollars, often becomes more attractive to investors holding other currencies. It's not just the major currencies that are outperforming the dollar. Several smaller European currencies have also posted strong gains. The US dollar has seen notable declines against the Norwegian krona, the Swiss franc, and the Swedish krona. This highlights a growing interest in economies that have stable financial profiles and are perceived as less risky. Investors are clearly looking for stability wherever they can find it, and these currencies are benefiting from that surge. Shifting our focus to Asia, Japan is a country everyone is watching closely. The Japanese yen has experienced some significant movement recently. Japanese authorities have been vocal about their commitment to maintaining orderly market conditions, trying to prevent any wild, destabilizing swings. Recent comments from Japan's finance ministry did help to stabilize the currency, with the dollar easing a bit against the yen. The Bank of Japan also recently made some adjustments to its policy, but the market is still waiting for clearer signals about their future plans. The yen's path will be a key storyline heading into the new year. As we approach the end of the year, trading activity naturally slows down. However, investors are definitely not taking their eyes off the currency markets. The trends we are seeing now suggest a major period of adjustment is underway. Investors are busy reassessing their expectations for inflation, interest rates, and economic growth around the world. They are positioning their portfolios for what comes next. So, to sum it all up, the era of the super strong dollar seems to be winding down. At least for now. We're entering a more balanced, multipolar currency world. A weaker dollar can be good news for US exporters as it makes their goods cheaper for foreign buyers. It can also be beneficial for emerging markets that have dollar-denominated debt. However, it also means that imports into the US will become more expensive, which could have an impact on inflation down the line. The key takeaway for all of us is that the global economic landscape is shifting. The dominance of the US dollar is being challenged, and other currencies are rising to the occasion. This creates both new opportunities and new risks. Staying informed and understanding these dynamics will be crucial for navigating the financial markets in the coming year. What do you think about the dollar's decline? Are you adjusting your investment strategy? Let me know in the comments below. I'd love to hear your thoughts. Thanks so much for watching. If you found this video helpful, please give it a thumbs up, and don't forget to subscribe for more updates on the global economy. See you in the next one.